Long-term wealth versus quick flips. Why we're building generational wealth through multifamily real estate. Hi everyone, welcome back to the channel. My name is Shade and I am the owner and founder of Ellison Capital. And our channel is Ellison Capital TV. Today, we are going to talk about something I feel very strongly about. It's the difference between chasing quick flips and actually building long-term generational wealth. If you've ever wondered why so many investors burn out or why some families seem to stay wealthy for generations, this video is for you. So make sure to like, subscribe, and let's get into it. Now, let's start with the obvious question. What's the difference between speculation and investing for the long term? Speculation is when you buy an asset hoping its price will rise quickly. Maybe a single family home that you're hoping to flip, or stock, or even crypto. Now, it can work, but it's unpredictable. It heavily depends on timing, market sentiment, and a bit of luck. Let's be honest, right? Long-term investment, on the other hand, isn't about timing the market. It's about buying assets that produce income, have intrinsic value, and appreciating steadily over time. In my case, and maybe yours too, that means multifamily real estate, specifically value add properties. You guys know that is my favorite type of project to work on. Why? Because it's not about what the property is worth tomorrow, it's about what it can earn year after year for decades. So the other thing that I want to talk about is the generational wealth mindset. When people hear generational wealth, they often think of huge family estates or trust funds, but really it starts with the mindset. Instead of asking, how quickly can I cash out? When can I get my money back? Ask, how do I build something that will pay my kids and even my grandkids? Here's what that looks like in practice. Choosing stable cash flowing assets over speculative plays. Prioritizing tax efficiency because tax eat wealth faster than almost anything else. Structuring ownership through entities that protect and transfer assets smoothly. And lastly, reinvesting profits rather than cashing out and spending lavishly. Now, I'm not saying that you can't enjoy the fruits of your labor, as you should. However, you have to spend responsibly and always think about the future. I'll give you an example. Recently, I looked at a flipped deal that could have made 100,000 easily in 6 months, but instead I chose multifamily building. I chose a multifamily building with steady cash flow and upsides in rent. Over 10 years, that deal will likely produce over $500,000 in equity and cash flow. That's real wealth, not a one-time check. Okay, so now on to part 3. Why quick flips rarely build lasting wealth. Now, hear me when I say it. Don't get me wrong. Flipping can make money. I have friends, investor friends, who flip for a living and they make money. But here's why it rarely leads to lasting wealth. 1, active income versus passive income. Flipping is active. You stop working, you stop earning, right? 2, market independence. A hot market can make you look brilliant. A cold market, not so much. 3rd, tax efficiency. Flip profits are often taxed as ordinary income, some of the highest rates. I'm not an accountant, ask your accountant. 4, compound effect. Once you sell, your assets stop working for you. Now, let's compare that to holding, right? When you hold, your tenants pay down your mortgage. Rent generally rise with inflation. The property itself appreciates, and you can refinance and pull out the equity to buy more tax deferred, which means you don't pay tax on it. So suffice to say, I always go with buying and holding multifamily buildings. Next, let's talk about building wealth that outlives you. So what does it mean to really build generational wealth? It means creating systems, stable income producing assets, estate planning, trust, wills, and proper corporate structures. Teaching the next generation, and this is so important, about money so it keeps growing instead of them losing it. A well-managed multifamily portfolio can keep paying distributions for decades. Imagine your grandkids receiving dividend checks from something you built today. That's the power of long-term thinking. Now, next, I want to talk about why this strategy feels slow. I always say I don't want to get rich quick. I want to get rich for sure. No, sometimes this approach can seem really slow, especially when you see others winning big overnight. But wealth that is built overnight disappears overnight as well. As Warren Buffett always say, our favorite holding period is forever. Real wealth compounds quietly. One property becomes 3, becomes 5, and then 10. Over 10, 20, 30 years, that changes your entire family tree. I hope this helped you see why we chose long-term wealth over speculation. If you're thinking about investing, ask yourself this: will this still make sense in the next 10 years? That question alone can save you from so many mistakes. If you enjoyed this, hit the like and subscribe button. Drop a comment telling me, are you team quick flip or are you team generational wealth? And stay tuned. Next week, we will be diving into how to structure your real estate holdings for maximum tax efficiency based on my perspective as well. Again, I'm not an accountant. I am only sharing my experience. So see you then, and thank you guys for watching. Bye.